Hello everyone, my name is Jose Aurelio Fiorio Weberhofer, and I want to continue our analysis of the Dubai residential market, residential yields, rental yields. In the previous video, we established a model using property prices and interest rates to explain the rental yield movements. That initial model, covering 60 months, explained 31% of the market's behavior. We can see 31% of the market behavior was explained by the previous model. We can see here we had 60 observations from Jan 2021 until December 2025, 60 observations. But today we want to go deeper. We want to expand the research to the supply side of the market to answer a very critical question. Does the massive volume of off-plan sales actually drive yield compression in real time? So let's go back to the data. This is the list of off-sales volume, sales volume of off-sales property from Jan 2021. Let's insert a chart just to see the trend. Of course, will be upward, but that's what happened between 2021 and January 2021 and December 2025. To maintain an integrity, we utilize again 1.5 million transactions. Here is the rent data. You can see on the rent data we had 1,048,000 transactions, and on the sales data we had 600,000 transactions. 600,000, so it's 1.5, 1.6 million transactions. But we applied a strict gatekeeper, or we sanitized the data because there were a lot of typo mistake, extra zeros. Someone forget to add a zero, or they put an extra zero or an extra one, or things like that. Okay. Now, before looking at the results, we must address a very key change in the math. So let's go to this. This is the data. These are the column C is the sum of off-plan sales value, and column D is the logarithmic value of those. But there is a lag of 1 year. From here to here, it's pulling the data. This logarithm is the value of this. This value is a logarithm of this value here, right? We have to add a lag. The problem was that we were not able to pull off-plan, sum of off-plan sales before January 2021 from the Dubai Land Department. So we were forced to start our logarithm value from January 2022 onwards. So for that reason, we have only 48 observations instead of 60, what we previously had. Nevertheless, it is still sufficient information to establish a statistical value. What are the core results? In 3 words, price is king. Continue to be king. Continue being king. The results here confirms that a 1% of increase in prices translate to a decrease in yield by 0.67%. And this is very significant. If you look at the p-value, it is still very close to 0.003. So it's very significant. Previously, in our multilinear regression, the change in prices represented a decrease in yield of 0.62, and now it's 0.67. So that's because we introduced a new variable into the regression analysis, but it's still very significant. So this proves that capital gains are outstripping rental growth. Let me write down. Yield is equal to rent over price. We know that. So obviously, if the price increases at a faster pace than rent, then the yield is going to compress. And this is exactly what is happening in the Dubai market. Now, there is an off-plan mystery here because the value is not significant. It's not statistically significant. We have here a 0.29, which indicates that the supply factor does not affect rental yields in the short term. Okay. Investors are flooding into off-plan launches based on future speculation. Current rental yields remain inelastic to this sentiment. The supply shock doesn't happen when a project is sold in a showroom. It only impacts yields when those units are physically handed over to the market. So we can say very clearly, Dubai currently is a capital-driven market. Capital-driven market. The supply side lags in its effect to the rental yields. The supply side, considering off-plan supply side. So what is our takeaway for 2026? Yield compression is a byproduct of capital appreciation. As long as global demand for Dubai assets stays high, yields will continue to act as the shock absorber for price growth. And that's it. So if you found this video helpful, please subscribe. And if you have any questions or comments, feel free to send it through. Thank you very much.